So let's move to part B of that question. Part B, the examiner was requiring the preparation of the statement of changes in equity. Statement of changes in equity for the year which ended 31st of December 2022. Now remember, we say that this is prepared basically to show or to explain why there was a change in the various items of what? Of equity. In preparing this statement, we have said we start with the details column and then we identify the items of equity our company had during that year. So items of equity include ordinary share capital and items of reserves. So if we go back to the trial balance, I think from where we have ordinary share capital, that is the first item, share premium, the second one, retained profit, that is the third one. Do we have any other like general reserve and revaluation reserve? No. So mean that in our case, we only have 3 items of equity, and then automatically we need to have what? We need to have the total what? The total column. The total column. So let's have those columns here. We have those columns here. I've said we have we're going to have a number of columns. The first one will be the details column, details column, and then ordinary share capital, share premium, and then retained what? Retained profit, and then the total column, Also our figures here, we indicate they are in thousands of shillings. So what do we start with here? We always start with the opening balances. Balances brought down. So the balances brought down, these are the figures we have in the trial balance. For ordinary share capital, the opening balance was 200,000, share premium 50,000, retained profits 223, 640. Then what we need to do, basically we get now the totals. So we have 200,000 plus 50,000 plus 223, 223. 640, and that will give us a total of 473, 640. And then what we need to do is basically to take into account the transactions which occurred during the current year and which affected those items. The first adjustment which we need to make to this particular retained profit is what we were given in the additional information number 5. Not number 5, but note number 3, in relation to this particular budgets which was supposed to be written off, which related to the prior year. So remember we said that this is a prior year adjustment. So therefore the first adjustment we make is to adjust this opening balance with the prior year adjustment. We say that the prior year adjustment, these are the adjustments which were supposed to be factored in, to be taken into account in the prior years, in the previous years, but they were not taken into account. Remember, this amount of budget was supposed to be written off in the previous year, but it was not written off. So what we do is that we deduct it from the opening retained profit, and then from there we take into account the transactions which occurred during the current year. I think we can start by taking this right issue. The right issue one, we said we need to add to the ordinary share capital, we add 40,000 because this amount was not accounted for, but it was credited in the suspense. And then to the share premium, we add what? We add 20. So that will give us a total of 60. We take it to the last what? To the last column. What else do we need to capture here? The profit for the year. the profit for the year here. The profit for the year, that will be added to the retained earnings at the start, and the profit for the year is 371,490, and we take it to the last column there. Yes, that's what we have. What else do we need to capture here? In the trial balance, we have some interim dividends which were paid. So basically we know that dividends are paid from the profit, and therefore we need to list them here. So the interim dividends paid as per the trial balance were 10,000. So we list them here, and also we take that to the last column. Do we have anything else we need to capture? We need to take into account here from the trial balance. Okay, from the additional information, note 1, note 2, note 3, note 4, note 5, note 6, note 7. Yes, I don't think we have anything else. So what we need to do here is basically to get now the balances carried down, and we say that these are the balances now which we transfer to our statement of financial what? Position. So let's get those balances. The ordinary share capital here, the balance at the end will be how much? Will be 240. 240. What about the share premium? It will be 70,000. 70,000. What about the retained earnings? The retained earnings, the opening balance is 223,640 minus 5,000 plus 371,490, which is the profit for the current year, minus the interim dividend, which is 10,000. So that will give us what? It will give us 580, 130. And then we get now the total there. The total you can work out all that, or you add across. So let's just add across, and then we will confirm whether it is correct. So these we add 70,000, we add 240,000, 240,000, 240,000, 240,000. Yes, so this will give us what? This will give us 720, 130. Maybe we can work this downward. We see whether that is the same figure we are going to have. 473, 640 minus 5,000 plus 60,000 plus 371,490 minus 10,000 minus 10,000. Is that what you're going to get here? No. So let's I'm getting a figure here of 890, 130. So basically we can confirm again. So let's take 240,000 plus 70,000, 70,000 plus 580, 130, 130. Yes, the correct figure should be this one. So that is 890, 130, 130. Yes. So basically that is our statement of what? Changes in equity. Our statement of changes in what? In equity. And basically that what was required in part B. Remember this is part B, not part A. Part B. So then finally we prepare now the statement of financial position. Statement of financial position. Position as at 31st of December 2022. 31st of December 2022. 31st of December 2022. So this is quite simple because we have most of the items to be included here. For example, we have all the items of what? Items of equity. So when preparing the statement of financial position here, we said we start with the assets. First of all, we record the non-current asset, and then current what? Asset. So what we start with are the non-current assets. The non-current assets, we need to have a single column here. And also we have to indicate that all our figures are in thousand of shillings. All our figures are in thousand of what? Of shillings. So these are non-current what? Assets. Non-current assets. So what we start with here, definitely we're going to start with the PP, the property, plant and what? Equipment. And in our case here we have various items of PP. We have property, we have plant, we have motor vehicle, we have office what? Equipment. So what we need to do as far as those items of PP are concerned is we compute their total net book value at the end of what? Of the year. And basically we include that here as a single figure of what? The PP. Remember what you have said here is that when preparing a statement of financial position for publication purpose, you don't record those items here separately. For example, you compute the net book value of plant, we include it here separately, plant the same. No, we don't do that. In fact, in an exam situation, if you do that, those items will not be marked for you. So what you do as far as the tangible and current asset are concerned, you compute their total net book value, all of them, and then you include that here as PP. As what? A PP. So let's start with the property. Property, the cost is 60. And because this property include building, we have now to less the accumulated depreciation of buildings at the start of the year. Or basically, we have to less the accumulated depreciation for buildings at the end. So what would be the accumulated depreciation for buildings at the end of the year? Accumulated depreciation at the end of the year. So in terms of how we compute this, we take the accumulated depreciation at the start, which is part of the trial balance, or which is in the trial balance, and then we add the depreciation for the current year. The depreciation for the current year for buildings is how much? Is 10. So this will give us a total of 90. So we let's start now from the cost. From the cost. Then to this, we add plant. Plant, that is, the cost is 2 what? Is 280. And then what will be the accumulated depreciation of plant at the end of the year? We take the accumulated depreciation of plant at the start as given in the trial balance, 111, 160, and then we add the depreciation for the year here. How much is it? 14.5. 14.5. So this will give us an accumulated depreciation of what? It will give us accumulated depreciation of 125, 560. So let's just confirm that. We confirm whether that is correct. That addition is correct. We have 111, 160 plus 14, 500. So which will give us a total of 125, 560. Yes. So we less it here. 125, 560. But also, as far as the plant are concerned, we have to remember something. There was a plant which was disposed, and that plant is part of this. So what we need to do, the plant which was disposed, we need to less it from this net book value which you're going to get. Can you remember the net book value of this plant which was disposed? I think we can compute its net book value. Its net book value will be 39,700, and then minus accumulated depreciation. Its accumulated depreciation of 15,860. So therefore, its net book value was 23,840. So what we have deducted here is the plant which was disposed because it was not accounted for. So then from there, we add the net book value of motor vehicles. So what will be the net book value of the motor vehicles? We take the cost, which is 70, and then equally we compute the net book value at the end. The net book value at the end will be equal to the the accumulated depreciation at the end will be equal to the accumulated depreciation at the start, 42, and then to this we add the depreciation for the current year. How much is it? 14,000. 14,000. So that will give us a total of 56,000. So we less it from the cost, which is coming to 56,000. We less it from the cost, and finally we add office equipment. Office equipment, the cost is 40, and then we compute the accumulated depreciation at the end for office equipment. The accumulated depreciation at the start, as given in the trial balance, is 15. What about the depreciation for the year? 5. So the accumulated depreciation at the end for office equipment is 20,000. So we let's start now from what? From the cost of 20,000. Yes, so that basically how we compute what? The net book value for the property, plant and equipment. Remember, property, plant and equipment here, these include all tangible and current assets. So let's work out that. We have 600,000 minus 90,000 plus 280,000 minus 125, 560 minus 23, 840. This is the plant which was disposed, plus 70,000 minus 56,000 plus 40,000 minus 20,000 minus 20,000 minus 20 what? 1,000 minus 20,000. So I think we can confirm that working so that we get the correct figure. Let's confirm that. So the first figure is 600,000 minus 90, that is okay. And then plus 280,000 minus 125, 560, 125, 560 minus 23, 840. Plus 70,000 minus 56,000 plus 40 minus what? Minus 20. Yes. So I'm getting a final figure here of 674 600. Yes, so that is the final figure for the PP. And then here we said we check for other assets like intangible asset, the investment, and so on. So let's go back to the information which we have in the trial balance. I think in the trial balance we have already captured the first items of PP: property, plant, motor vehicle, office equipment. Below that we have accumulated depreciations. And then we have in opening inventory, purchases, distribution, admin, revenue. We have already captured all those particular items here. Trade receivables, trade payables, those are items of current asset and current liabilities respectively. And then that bank balance, you can see that is an overdraft because the balance is on the credit side, is still a current liability. Deferred tax, that is an item of non-current liability. Current tax, we have already captured that. Bank interest, we have taken into account that. And then ordinary share capital, share premium, retained profit, all those are items of equity. Interim dividends and suspense, I think we have already captured all those. So basically it means that we don't have any other item of what? A non-current asset. So what we need to do is we proceed and record now the items of current assets. So let's record current assets. Current what? Assets. So for current asset, we have a number of items. In the trial balance, we have trade receivables. Now the trade receivables in the trial balance is given as a figure of 74,500. But this figure will need to be adjusted with this particular amount of 12 million, which was included as part of the receivables. But you're told those receivables are non-existent. So we reduce our receivables with an amount of what? 12. So we deduct 12 here, which will give us 62,500. Okay. And then from there we check whether we have any other item of current assets. So the bank balance which are given in the trial balance, you need to know that that is a bank overdraft because it is on the credit side. The examiner will not tell you that. It is upon you to know that that is a bank overdraft and therefore is a current liability. Yes. In the trial balance, we don't have any item of current asset. What about the additional information? Number 1, you have dealt with that. Number 2, 3, 4. In note 5, we have the closing inventory. The closing inventory is included here as part of a current what? A current asset, which is 85. And then I think we are through Yes, we don't have any other item. So what we need to do now is to get the total assets. To get the total what? The total assets. So let's add these particular items, and PPE, and then the two items of what? The two items of current liabilities. So we have 674,600 plus 62,500, 62,500 plus 85,000 plus 85,000. So that will give us total assets of 822,100. 822,100. And then from there, we proceed and record what? Equity. Now for equity, this is quite simple because we have all the items of equity to be included here. From where? From our statement of changes in equity. So we just need to copy paste those items here. We start with ordinary share capital. Ordinary share capital, the balance at the end of the year was 240,000. We have share premium. Share premium. The balance at the end of the year for share premium is what? 70,000. 70,000. Then we have the retained profits. The retained profits. At the end of the year, it was 580. 130. And now what will be our total equity is what we have here. Total equity. Total equity. Total equity is what? Is 890. Is 890, 130. 890, 130. Okay. So then from there we proceed and we record the non-current liabilities. The non-current liabilities, non-current liabilities. So which non-current liabilities do we have here? So for non-current liabilities, we say these include things like the bank loan, things like debentures, redeemable preference shares, and maybe something like the deferred tax. So what we need to check are the non-current liabilities which we have here. And in this question, we don't have bank loan, we don't have debentures, we don't have redeemable preference shares. I think in our case, we will only have one non-current liability, and that is the deferred tax. And the deferred tax which we include here, first of all, if we go back to the trial balance, we are given a deferred tax of 32,400. But remember what we are told in note number 4, that the deferred tax provision is to be reduced with how much? With 3 million. So therefore, the amount of deferred tax to be recorded here, the amount of deferred tax which will be recorded here as a liability, we take the amount given in the trial balance, which is 32,400, and then we reduce this with how much? We reduce that with 3 million. So this will give us what? This will give us 29,400. 29,400, and equally we can confirm whether that is working is correct. 32,400 minus 3,000. Yes, that will give us 29,400. So do we have any other non-current liability? I don't think so. We don't have any other non-current what? Liability. So finally, what we need to record are the current liabilities. Current liabilities from the trial balance. We have what? Remember, the liabilities have a credit balance. So check the items on the credit side. So one, we have the trade payables. The trade payables. The trade payables is an amount of 68,800. Then below that we have the bank balance, or basically the bank overdraft. The bank overdraft. And the bank overdraft is 15,500. 15,500. Yes, I think those are the two items which we have in the trial balance here. In the trial balance. And then in the additional information, we check whether we have any other item of current liability. Note 1, we don't have any item of current liability. Note 2 is about depreciation. Note 3. And then note 4 we have the current tax for the current year. The current tax. So that tax, remember, had not been paid, and you're told in this case the company was supposed to pay, or the estimated tax liability for the current year was how much? Was 52. That's what we include here. Yes, and then note number 4 is about note 5 is about inventory. Note 6 is about what? About now the right issue, the amount of what? The right issue. So I don't think we have any other item of current liability to be included here. So what we need to do here is to get the total equity and liabilities, the total equity and liabilities. But there is something we need to adjust here. There is something which we added longly, because if you check on what we got here is the total equity, definitely you'll be able to see that that is more than total asset, which is basically wrong. So the figure which is wrong is this figure for retained earnings, or basically the retained profit. So there is something we added longly here. We need to make some changes quickly. So what do we have here? We have 138,000 plus 667,000 minus 85,000 plus 3840 plus 14,500. So that will give us what? That will give us 738. So this figure, instead of adding what we did, we deducted, which was actually wrong. So the correct figure here should be 738. 738 what? 340. So then we get the correct figure for the gross profit here. That was an error. So let's get the correct figure for the gross profit. We deduct that from our revenue, 1103,500, and that will give us now the correct figure for the gross profit here to be 365, 160. So what else do we need to change? Our profit here before tax. Our profit before tax. So our profit before tax, we take 365, 160 minus now the three expenses, 58,000 minus 115, 500 minus 2400. So that will give us a figure of what? 189 to what? 260. And then we less the current tax, which is 54,600 plus the deferred tax income of 3,000. Yes, and our correct figure here for the profit for the year would be 137,660. Equally, that will be the total comprehensive income there. Yes, so that was basically a small addition, a mistake or error. So we also need to adjust this figure for the profit for the year, because the correct profit for the year is how much? Is 137,660. 137,660. So meaning that this will also change here. This will also change here. Those two figures will change. So let's work out this. The retained profit at the end of the year. So we take the opening balance here, 223,640 minus 5,000, which was the prior year adjustment, plus the profit for the year 137,660 minus the interim dividends which were paid of how much? 10,000. 10,000. So that will give us a figure of 346,300. Yes, and then we get now the total equity there. So we can work out that we take 346,300 plus the 70,000 which we have here, plus 240,000. 240,000. So that will give us now the correct figure here of 656,300. So therefore here we equally need to change this figure here. The retained earnings at the end, the correct figure is what? 346,300, and the total equity as per our statement of changes in equity is 656, 300. I think now we can get now our total equity and what? Liabilities. So our total equity is 656,300 plus now the deferred tax 29,400 plus the payable 68,800. I hope that figure is correct. Yes. Plus the bank overdraft, which is 15,500, plus the current tax 52,000. So let's take that again. We start from equity there, 656,300 plus 29,400 plus 68,800 plus 15,500 plus 52,000. Yes, that will give us what? That will give us a figure of what? A figure of 822,100. 822,100. Yes. So basically that is it. That what was required as far as that question is concerned. That was an illustration question on the topic of what? Published financial statement. So basically that brings us to the end of that particular class. We meet in our next class as now we look on how we prepare the statement of cash flows. Remember what so far we have covered here is the preparation of the statement of comprehensive income, statement of changes in equity, statement of financial position, and then what is remaining is for us to discuss something to do with the statement of cash flows, the presentation of the same, and so on. So see you in the next class as we look on that.